It's a bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Boy, take a look at this day, huh? Wonderful day out there, despite a little bit of rain, which greens things up, as you can tell. Ocean looks very, very nice as well. Let's talk about a couple things I want to talk about. Boy, it's kind of redundant. Talk about some things I want to talk about. Let's see here. Screenshot. There's my screenshot. I like this saying I saw a little bit earlier. When I got up this morning, you know, I always try to check the news and see what's happening. And actually, some pretty awful news south of us here in Miami with that building collapse. I don't mean to digress, but boy, that's really sad stuff. And that's about 30 miles south of us. And anyway, we'll get into that a little bit later, maybe just a bit. It is part of the news. When plunder becomes a way of life for a group of men in society, over the course of time, they create for themselves a legal system that authorizes it and a moral conduct that glorifies it. This is by Frederic Bastiat, a French economist, and please tell me if I mispronounced that. I probably did. A very, very powerful statement, very astute statement by this gentleman. And kind of what we've got going on right now out there in society, I believe. Well, since 1913, when they created the Fed, they've been stealing from us, in my opinion. One way through taxes or through inflation, one or the other, or deflation of the value of your money. That's another way to look at it. Let's take a look at the overnight ranges. The coin said bear here, and looks like we've got a little bull going on. And remember, the coin is just for fun. It seems to be right sometimes, and has its little streaks where it's right for 2 weeks. So that was pretty freaky. But been wrong for about a week or two now as well. So, boy, let's take a look. And I'm going to do a quick refresh here. And let's see what we've got going on as far as I haven't refreshed this in a few minutes. Down a few bucks. Looks like it was 1786 when I last looked. So we're 390 up this morning, 1783.48 currently right now. A low overnight since yesterday's New York close of 1773.98, as you see right there, and a high of 1788.57. So kind of looking stable or steady at this point. You know, tomorrow's still Friday. Let's see if they monkey hammer it Friday. There's no new Fed speak or Fed talk coming out. I think all the numbers came out this morning pretty much. I believe they are going to jawbone a little bit as well, but the numbers did come out, and we'll kind of gloss over them in a little bit here as well. 25.84, the low on silver, 26.16 being the high, up about 18 cents. So silver is kind of clawing back its deal there in little 10 and 20 cent increments, but sitting above 26 at the moment, and platinum nearing that 1100 level. All three metals are really cheap. As I said, last week gave us a good opportunity to buy the freaking dips there, my folks, or my friends, I should say. And hey, that's all I can say right now. Is I just think metals are still pretty damn cheap, especially in the big picture. You know, unless you're like nearing the end of your life stages here, and you're getting older, you've got some kind of diseases that you're worried about. You may not survive a long time. I think you're going to see some really cool and great things in precious metals, and it'll happen really quickly before any of us probably expect it. Well, a lot of us expected it a while back ago, but we'll talk about that too. Well, what's there to talk about when it comes to that? Expectations, right? Well, let's take a look at. Let's step back into our time machine and have do a little flashback here to last week, or a little bit past last week. You know, we were talking about this down market. You know, the Fed pretty much hammered gold prices about $100, $150. And, you know, if we hop into our little time machine, go back to last week and look at a news article from, let's take a look at it, 6/16. Gold price forecast for gold snaps 3-day downtrend to regain 1860 ahead of last week's meeting. Last week's meeting where the Fed monkey hammered commodities and monkey hammered gold and silver, and did their best to, I think, prop up stock markets. Who knows what they're trying to do? The Fed is all about stock markets, I think, right now. And let's see what we're hopping back into our time machine, and this is over a week. I don't even know what today's date is. It's the 24th. Oh my gosh, well over a week ago before the Fed meeting. And what were we reading in the morning? Okay, all of us probably. Buyers attack intraday top near 1860. Well, this is FX Street right here. Buyers attack intraday top near 1861, marking the first daily gains in 4 days ahead of Wednesday's European session. The U.S. dollar pullback seems to trigger the corrective pullback of gold, up 0.14% intraday ahead of the U.S. Federal Market Committee. Now let's just pretend we're in last week. So, FOMC meeting. The greenback tracked sluggish moves on the Treasury yields while fading the previous day recovery moves near the monthly top. Earlier in the day, gold prices dropped to $18.53. Now, again, this is before last week's Fed meeting. Here's the interesting part. Amid anxiety over how the Fed Chairman Jerome Powell will deal with the reflation fears. However, the market players seem to build optimism heading into the European session as the mixed data from U.S. has already raised concerns over inflation woes and the dot plot, not to forget Powell's ability to smartly push back the market forces for tapering. Traders may keep an eye on the second-tier data from UK, Canada, blah, blah, blah. Previous updates, gold is heading back towards the 200-day moving average at 1840. So we were at a 200-day moving average prior to the Fed speak, the Fed opening their yappers last week. As sellers return following a rejection against nearing that 1860 mark. The U.S. dollar continues to hold the higher ground ahead of the all-important meeting that's coming up. We're going to pretend right now we're last week. We're in our time machine. U.S. dollar continues to hold the higher ground ahead of the all-important meeting this week, Wednesday, which will be followed by Fed Jerome Powell's press conference. Blah, 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 blah. A breach of a key technical support of 1879 has pushed gold price into a bearish trend. Investors remain focused on the Fed outcome. Precious metals struggle. Gold prices were down a little bit. More or less, last week we were worried about what the Fed was going to say. And funny that that's kind of how it happens, how it ended up here. And if we take a look after the Fed spoke last week, they kind of, here, where is that? The Fed's inflation gamble continues. I kind of like the chart that they were putting there. There you go. There's a great example of what happened last week with precious metals. It was a government slam. And if you're not familiar with how government slams precious metals, you need to be reading gata.org. It's called The Basics right here. And the gold manipulation, why, how, and how long. These are the smartest people out here as far as when it comes to who the players are, how the game is manipulated, and all that good stuff. And I'm sure a lot of you folks that have watched my show many, many times before, my video here many times before, are saying, gosh, Brian, I've heard that so many times, but it's true. They know who rigs the game, and that's exactly what's going on here. You've got the Fed basically monkey-hammered precious metals markets last week, amongst other markets. They monkey-hammered in some markets that they baby, and they like stock market and the equity market. Their entire intentions. For some reason, there's some weird belief that just pumping money into equities or into rich people who are buying equities and getting richer and richer in these big Wall Street corporations and these corporate, people that can get these low interest rate loans and just plop it into a stock market that just keeps continually going up because of this endless cycle of printing money. I could go on and on, but no less, gold price got stomped by the U.S. Fed, no doubt in my mind, and central banks. I'm sure, despite the fact that they take a look at the gold price, U.S. Federal Reserve meeting, and I like this. Again, this was done by Gold Core. Thank you for the graph there, Gold Core. Appreciate it. But it's a visual. It shows you exactly what happened last week and why it's such bullshit. U.S. Fed Reserve meeting, and there's the price of gold. Whoop, right there, right in that meeting area. Now, the little article I was reading to you was the 16th, which was like right in this area right here, right before this whomp. But look, it's so obvious right now. They used to try to hide it when they would stomp on when they stomp on gold and silver, particularly gold. Central banks don't really stomp on silver much. That's a lot of short sellers and players in that field. I don't believe they do, at least. Maybe they do. Maybe they trade for the U.S. government, but I don't think so. The Fed mostly deals in gold. And look at that whomp right there. And now take a look at it. There's another chart down here, like at the same time of that whopping. Look at the 16th. Look at it, U.S. 5-year Treasury yields. Boom, right there. And again, that's kind of a short-term. What is this? Short-term Treasury yield. Yeah. Look at that blip at the same time. So. And who has the ability to do this? And look, there's the U.S. dollar index as well, right before a whomp, the same time that gold got that reverse whomping. There you go, a reverse whomping. So it was definitely an orchestrated. Last week's downward pressure was orchestrated most absolutely by the U.S. Federal Reserve and central bankers, without a doubt. And it was probably done on a global level by a lot of central bankers. And of course, central bankers don't mind. They have no issue with gold price dropping. A lot of the big central banks, for example, look at Poland right here. This was just in the Warsaw Business Journal. Didn't make much other news. You had to go look to find it, but National Bank of Poland increased its gold reserves to 230.54 tons. It pointed to the possibility of introducing a strategy that provides for the purchase of 100 tons of gold to the domestic reserve over the next few years. And of course, they don't mind buying these lows, and they're going to buy the dips for sure, I would imagine, you would think. Although not quite sure how central banks buy gold. It seems like they have to pre-announce it. And that given the case over the next few years, I would suspect the Bank of Poland is going to be cost averaging up in their gold prices. That's what I'm looking at. Unless all central banks are just trying to keep the price of gold down until they get the reserves up where they want it to be, then they'll let it fly. The real players and the real manipulators are central banks. But no less, take a look at this. National Bank of Poland is increasing their gold supply. And why do central banks, whether it's the Federal Reserve or whether it's European central banks or whether it's whomever it may, Russian central banks, why do they all covet gold? Why do they hold gold? Because they know exactly what gold's about. It's about wealth preservation. They also know that when gold prices get out of control, it's kind of a tell, when you're playing cards, a tell. It's like a tell on the economy. So if gold prices are continuing to shoot up, that's kind of like, most people say, well, that's not a good sign for the dollar. It's not a good sign for economy, because typically gold goes up when things are really not going good. So of course, when you have the Fed out there job owning an economy, trying to keep the economy, and all central bankers across the world trying to keep the economy afloat. Okay, the last thing they need is a tell like gold giving away the whole plan. And so of course they're going to keep the prices of those metals down as well. And again, they want to add to the reserves. Wouldn't surprise me if a lot of central banks loaned out their gold, have paper gold, and are very concerned right now about turning that paper gold back into physical gold. So maybe there's a vested interest for central banks to keep the price of gold down as well, besides being a tell on the economy and the dollar. Oh, that was long-winded, so that's just my opinion. Let's take a look at a couple good articles here. I like the charts by Goldcore here. I kind of read this over and I just kind of mimicked what it said, or mimicked what I said, or whatever. We kind of concur on the same thing, the Fed on the economic recovery. Good article, though. I'd recommend you take a read of. The Fed's inflation gamble continues. You can read that for free on ZH there. ZH doesn't charge for you to read any of these articles. Shocking inflation numbers will fail. This is CNBC. And hurt reopening trades, economist David Rosenberg predicts. Economist David Rosenberg, and again, this is CNBC, this is corporate media, and this is what most people watch, and most people news, and most people's economic news and financial news comes from, like CNBC or Fox Business, whatever flavor people particularly prefer. But this is, they listen to people like David Rosenberg. And I'm not, here, anyway, I'm going to read this. Economist David Rosenberg believes the bond market is getting inflation right and yields shouldn't trade at higher levels. His reasoning: inflation is a temporary phenomenon. And I agree 100%. Inflation is a temporary phenomenon right now, no, it's not a temporary, I'm sorry. It's transitionary right now because caused by an enormous pent-up demand and supply chain connected to the coronavirus pandemic. And that's exactly right. I mean, there is a supply chain issues right now. We're closed down for over a year. The numbers have been shocking to the upside, no doubt about it, but it's pretty easily explainable. The Rosenberg research president told CNBC Trading Nation on Friday, "I don't understand why people want to superimpose the last couple of months into the future. So far, the bond market is struggling." And what I wanted to point out about this is, yes, he's absolutely right, and we discussed this many, many times. The inflation blip that we're seeing right now is because of, a lot of things were closed down. And it was connected, and as he said right here in Getting Inflation Right, where did I say? Well, sorry about that. But supply chains were basically shut down. So that's exactly why we've got some of this inflation that's showing right now. But that's temporary. That's temporary. What David Rosenberg completely misses is the amount of money that the Fed has pumped out there, and the amount of money that is really cheapens the buying power of the dollar. Also, the de-dollarization of Russia, China, and a lot of other countries. Where are all those dollars going to come home to roost, and what does that actually do to the buying power of the dollar? I'd like to see Mr. Rosenberg explain that. And he kind of omits that completely, just saying, well, inflation won't happen because they'll catch up with the manufacturing. But he completely misses it, or doesn't want to take a look at, what does this huge amount of printed dollars out there, what does this do to the buying power of the dollar? I asked Mr. Rosenberg that. You know my answer, of course. And it causes major inflation. Well, there, I said it. National Bank of Poland buys gold for the first time in a couple years. Well, we talked about that already. And, I didn't really go over much in the ZH articles here. Let's see if there's much to talk about. This is absolutely tragic. I got up this morning, and it's all over our local news. This is about 20 miles south of me, 30 miles south. Gosh, massive search underway for Miami condo building collapse. And I tell you, it's really awful, folks. I don't mean to... that has not much to do with gold and silver and precious metals, but it really, if you want to think about it, yeah, there's some videos of the collapse, and right there, oh geez, I couldn't even imagine. It's pretty awful. Put a damper on my mood quite a bit today, actually. Oh wow, that's pretty sad. Anyways, what does this have to do with the economy? Well, infrastructure, this is basically a brand new condo in the 1990s or something like that. And we're probably going to find structural or something happen that shouldn't have happened down there. But, we've got the issue going on with bridges and roads and things like that. We've got a crumbling infrastructure out there. And, what happens when bridges start falling and roads start failing and that kind of thing. And I think we're going to see more and more of that. We just don't have the money to pay for it. Where's the money going to come from? I heard about the infrastructure project, but well, I digress. I don't know why I went there. Sorry about that. It's kind of on my mind news. And again, Q1 GDP estimate comes in at 6.4% as expected, closing the book on Q1 economy. May durable goods order disappoint. Initial jobless claims disappoint again as Pennsylvania pukes again. I guess we all expected that. More or less, the economic data today was nothing fantastic. Futures jumped to all-time highs ahead of Fed speaker and the econ. That was actually yesterday. Today's data, obviously gold was up overnight in the morning, and I like to think that gold is kind of a tell sometimes. And that would indicate that the data is not that good that came out, especially jobless claims, durable good orders, and that kind of thing. So, again, gold and silver got monkey hammered last week by the Fed or by central banks and whoever their conduits are that help them do that. And that's the reason it got smacked down last week. There's the evidence is in your face. I mean, when, for example, when China saw that the price of copper and iron and aluminum were going too high, China just outright said, their central bank and the communist government just outright came out and said, listen, we're going to just pump out some iron, aluminum, and we don't care about the free marketplace and supply and demand issues. We're going to just artificially introduce more copper, iron, and aluminum out there. And whether it's in paper form or whether it was a physical form, I don't know. Probably a little bit of both. And they absolutely hacked the price of aluminum, copper, and iron in China, but they intended to do that. Now, our central bankers, they live under a cloak of secrecy, so they could have they could do that to any market, but I'm sure they do it to gold markets for sure. But they do it under a veil of secrecy. So is that worse or better? I don't know. I don't even like the idea of these guys being able to move markets like they do. When your economy depends on what a person says or doesn't say, that's pretty damn sad. Same thing with investments, in my opinion. Okay, I get a lot of opinions, don't I? The never-ending rally, interesting article there. It's about, take a look at the stock market. When does the stock market actually, the Dow Jones, look at it over, 33,000 or something like that? I really don't follow it closely, but my God, when does Is it a bubble? Has it been a bubble? I mean, at what point is this thing just got to explode and to the downside? Not to the upside. I anyways, it's crazy times, folks. And Bank of England keeps rates QE unchanged. They're not going to tighten it. Clear evidence of progress towards inflation goal. I don't think they know what they're doing. Probably even less than what the Federal Reserve knows. Well, we're going to move out of here. Not too much to talk about in precious metals. The best thing I can tell you is buy the friggin' dips. And gata.org, same thing. Recommend, again, always that you read that article called The Basics. This is kind of interesting. South African's brother vanished, and so does theirs 3.6 billion in Bitcoin. Sounds like these guys probably got kidnapped, man, and someone made them give up their Bitcoins. That's kind of crazy. But I guess if the FBI can track down who stole the money from the pipeline, maybe they can figure out who probably kidnapped these South African brothers. But that's, wow, that's, I guess it makes it easy, though, to get, in kidnapping, at least with cash, they'd have to kidnap you. You'd have to go to the bank, do wires, do transfers, get check or something like that. When it comes to Bitcoin, all they need is your encryption, man. Put a gun to your head and hey, give me your encryption and you're dead. Or take someone you love and put a gun to their head. In the case of our brothers, maybe. If you don't give us the encryption, your brother's dead. Wow. Heavy stuff there. Wow. Sorry to hear that. Hope that thing turns out well, or at least I hope the brothers are alive. Fed officials say temporary inflation surge may last longer than thought. Of course, that's what we were just talking about. Basel III to trigger liquidity squeeze. Gold price could be $2,100 by year, Gold X CEO says. The risk with Basel III is a major shift towards allocated gold, which could trigger a liquidity squeeze in the physical metals and lead to higher prices by the end of the year. Well, yeah, I think we kind of figured that out a little bit. Jim Rickards, The Great Reset is here. I'm not going to read all these articles. In fact, I'm going to read them tonight, tomorrow morning, because it looks like they just posted a whole bunch of cool new stuff up here on gata.org. So I'll go over some of this stuff tomorrow, and we'll talk about that. Meanwhile, maybe you'll beat me to it and read it first. I highly recommend you do. Yesterday's video, what next? And I'd like to thank everybody for watching. Not too many things to make a comment on. Thanks Jeremy Cricket for saying El Salvador. I couldn't remember the name of the country that went to Bitcoin yesterday, or started using Bitcoin as their national currency, or one of their national currencies, and competing with the U.S. dollar. And remember, governments and banks hate competition. The U.S. dollar, El Salvador has used the U.S. dollar as a sovereign currency for years. That's kind of what I was saying yesterday, but I forgot the country, and thanks for reminding me, Jeremy. Now they are saying they will use Bitcoin as well. I guess they've decided that the U.S. dollar will no longer be in the sovereign currency. Well, they're going to use it sounds like they're going to use the dollar and Bitcoin. Now that's kind of intriguing to me. I like the idea of a country having multiple sources of legal tender, giving, you know what's nice about that? Freedom options, giving citizens of a country or citizens options to pay in the currency of their preference. And that's freedom, more or less. I like that. It's freedom to choose. So thanks for watching, Jeremy. I appreciate that. Where else do we go? Oh, a lot of you folks that watch my videos on a daily basis, I really appreciate that. Oh, Kent seems a little disappointed down here. Mr. McClellan, I will never buy gold or silver again. It's a scam. They showered every in February, and I watched for 11 years. It won't be hitting 30 for a long time. Do keep on buying. I'm investing in the dollar. Wow. Oh, he's even got a couple thumbs up there, man. So you're a dollar bull, Kent. Well, good on you, man. I kind of disagree. I think the dollar's heading for the shitter like all fiat currencies do. And I don't know why anybody, maybe on a short term, that might be a good play. You will see some dollar strength if you're able to day trade on that. But long term, holding dollars, that's a fool's game, my friend. But again, thanks for watching, Ken. I appreciate it as well, and I wish you the best with that trade. Let's take a look. I'm just looking for some questions, but again, all you folks are great. Appreciate it a lot. Well, not too much again questions yesterday, so let's move in the best buys. Best buys out there right now for my local customers is 90% U.S. silver coins. I've got some good deals on it. I can sell to you at the silver price, starting at the silver price in very small quantities at spot plus $4.25. No sales tax on any amount. It's made by the same people that make the overpriced at $9 and $10 over spot silver eagles. The U.S. Mint makes this stuff. Not as pretty, but just as cool, and it does contain real silver, made by the trusted U.S. Mint. Great deal on that right now, better on a lot of other products. The other great deal I have is 100-ounce silver bars, spot plus $4.25. That's my starting price. You know, larger quantities, we sell this stuff for less, obviously. As I I won't get into the local part yet. Let me tell you what the best deals on gold. Best deals on gold are any of the gold bars that you can buy made by either Rand Corporation, PAMP Corporation, Valcambi, Perth, Swiss Credit, any of the good bars out there, and buy them from recognized dealers, people that you know, because there are, just like bad Krugerrands, bad Eagles, bad Maple Leafs, there's bad bars out there as well. So, I always recommend you buy, don't buy from a friend of a friend, don't buy them online, buy them from dealers that know what they're looking at. And you should be paying no more than $85 per ounce premium for any of these products right here. Again, the more you buy, the less you should pay, by some degree, not a lot. So that's the best deal out there. Eagles and KRs and things are still in that $100 plus mark. Little pricey in my opinion. When you can buy gold bars like this and these other products that I'm showing you, I recommend do that. It puts more ounces in your pocket per dollar, and that's what we're really here to do, is teach you how to put more ounces in your pocket per dollar. Well, as I recommend, I am a local brick and mortar dealer. I don't sell online or on the phone, only to local people that live in my area and walk in my store and hand me the monies. So I'm sorry about that. If you don't live in my immediate area, I always highly recommend, rather than buying online, I advertise to beat the three big sellers, APMEX, JM Bullion, and SD Bullion, for products that I can get and I have. And I always recommend, and they're great companies, don't get me wrong, I'm not dissing those companies at all, but when you have the ability, and if SD is in your town, go to SD and buy, or JM or Amex, but always keep your money local if possible. I even avoid buying on Amazon when possible, and I admit I still buy a thing or two on Amazon, and I'm not too particularly fond of the company and the fact that the money goes out of my city, out of my town, never to be seen again. This is why I want you, with your precious metal dealers, keep that money local if you can. If you have to drive an hour or two to find a good local dealer, I recommend you do it, because even if you are buying online and you don't want to take that hour or two drive, you're going to have to sell this stuff at some point. And who are you going to sell it to? You're not going to want to ship it in the mail. Trust me, I know this. So keep it local, folks. Well, this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Appreciate you watching. Our hours are 10 to 4, Mondays through Fridays. We're here, and call us anytime at 954-493-8811. And happy to help you. Again, that's for our local peeps down here. If you're not in our particular area and you can't come in to buy from us, feel free to leave some comments down there below, and I'll try to answer them when I can. And also, if you would like and hit the subscribe button, like that too. Hey, thanks. Have a great day, and I appreciate you watching. Talk to you soon.